This week on By the Numbers, join us as we talk about the price crash in Bitcoin. Sit back, relax, grab a cup of coffee, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lyndsay.
How are you?
I'm doing great.
Welcome back.
Yes, we're back from the 4th. Quick little vacation.
Yes, the firm was kind enough to shut down for the week and give us all a nice, well-deserved week of independence.
Exactly. But I'm thrilled to be back into the data. The data did not take a vacation. So we had some releases over the week that we'll be talking about a little bit later. And I'm glad to be back into the numbers.
Yeah, I don't think you actually took a vacation, though, because I happen to know for a solid fact that these articles came to me live from a beach near you.
Maybe. They did. So I did take a vacation. I just maybe brought some non-farm payrolls with me.
Yeah, some light reading.
Light reading.
Some light reading. Well, that is not how I spent my vacation. But, you know, I have 4 times the children that you have. Imagine yours running around the beach times 4. So yeah, there was no sitting still. We have to divide and conquer in my family or we risk losing one.
I've heard you go from playing man defense to playing zone defense with that many kids.
Yeah, at that point, it's just like you just are continuously counting them and making sure you have all of them. We lost one like almost to a pig at a petting farm, but it just ended up a little muddy. So
stay tuned later for that story.
Exactly. I'll let you know how that one panned out. So yeah, like you said, headlines didn't take a break. So while we did, we're back in studio here to go through some things. So let's jump right into
Let's do it.
Our first headline. All right, worst in history.
Love that.
Bitcoin suddenly hurtling towards a $1.9 trillion shock after huge price crash. That's the headline. But then, if you read the article, like we did, it goes right on to say that Bitcoin has stabilized, and it's after its sudden crash of this week. But extreme fear is still threatening to cause further problems.
Yes.
So,
a lot going on here.
Yeah, a lot going on here. But first, I've got to take a little bit of a pause here and ask for a Bitcoin lesson because my education in Bitcoin goes about as far as what I hear the wonderful Michelle on our team talk about. She's very into Bitcoin. She brings it up frequently when we're talking about new research topics. I've heard her talk about it in your speaker meetings and stuff like that. But I really nod along and pretend to know, like, I understand what she's talking about, and truly, I do not.
Okay.
So if you could please, and I hope that somebody at home is just as lost in Bitcoin as I am, so that you get something out of this, because in order for me to ask well-educated questions of this article, I really need to understand and make sure I understand Bitcoin.
Yes. So I want to admit up front, I'm not an expert in this. Maybe we should have brought Michelle in because she really is the firm expert in this.
We need to start a Phone the Friend where if I stump the Economist, this is a new game show we'll be playing one day. Stump the Economist, phone a friend, and we can dial in Michelle.
We should.
Right into Studio A.
But I'll make a go at it since we don't have that set up quite yet. But Bitcoin is a cryptocurrency or a digital asset. So essentially, blockchain is the technology behind not just Bitcoin, but you've probably heard of many of these other Ethereum and other currencies, right? Cryptocurrencies. I personally, maybe I'm just a very bad millennial, but I'm not big into crypto. I think the blockchain technology behind it, that is the real opportunity in the future. I think there are incredible things for banking, for supply chain, logistics, that could really come of that technology. But put that aside, it's essentially what is firing all of these currencies. And they are that. They're a currency in that we assign them value. We say this Bitcoin is worth something and trade it, right? You can buy it with dollars or with other, fiat currencies as they're called.
Well, that was my question. It seems to me like we've made up a currency here. And I mean, why Bitcoin and not like our kids' Monopoly money? That's at least closer to the real thing, visually at least. But how is this allowed? Is that even a fair question?
Well, anything can be a store of value if you give it value. So, I mean, what's to say a paper dollar bill is worth anything? It's just paper that we printed some ink on. But Bitcoin, and again, there are many others. Many have failed. They seemed like they were going to take off, and then they didn't for one reason or another. And so they're not worth very much or anything anymore. Bitcoin and a few of the other big ones really caught, I'll say they there's confidence in them as a store of value. So that's why we call them a currency.
Okay.
But paper money, we've talked about, potential ramifications with the U.S. debt in paper money and the U.S. dollar having some issues far down the line. Let's save that for later.
But the article, and we'll get into that too, is talking about using this cryptocurrency as a substitution for treasury bonds, maybe, or something like that. It talks about this, I'm going to call it a place because it sounds like a place, but you can correct me. It talks about Mount, and forgive me if I say this wrong, Mount Gox.
Yes.
And releasing a tidal wave of Bitcoin. So is Mount Gox the proverbial mountain that this is mined from?
I love where you're going with this.
I'm just trying to think of it like a layman,
Yeah, so we have to get into a little history of the currency here. But Mt. Gox was an exchange, so a way you could hold these. Again, there's no physical coin that I can give you for a Bitcoin. Right. I think some have been modeled, but really the value is in ones and zeros on a server somewhere, or on your hard drive. And so if you don't want to store your own hard drive with your own holdings, you can do it through exchanges and wallets and things like that. Mt. Gox was an exchange that was hacked back. This was more than 10 years ago now. And so they've been in the process of kind of, how much of this money that was stolen can we get back? And so what's happening now is Mt. Gox is paying those creditors, so people who lost money during this hack, this theft. But what's interesting is that Bitcoin today is trading about 10 times higher than it was when Mt. Gox declared bankruptcy because of this theft. So the overall recovery today is worth about $9 billion worth of Bitcoin. If all of that value, is returned to creditors, if that hits the market at the same time, the concern is that would be a big selling pressure. So that could drive the price down. So what this article is saying, again, huge swings. Yes. When I looked this morning, and again, a lot of volatility. So if you're watching this tomorrow, you might see a different number.
Yeah.
When I checked this morning, the price of Bitcoin was about $57,000. That's down from a high of almost $74,000 in March, which again, a very big swing.
Is that for one Bitcoin?
For one Bitcoin.
So $57,000 US dollars is what it costs to purchase one Bitcoin.
Correct. But you can purchase a share.
Fraction.
So 0.1, 0.0001.
Okay.
If you want just a little.
That's a lot of math. But yeah, that's crazy because I feel like, the stock market itself is often overwhelming for people. And, how many shares of such and such do you buy for it to be worth?
Very little. Very, very slim shares.
Yeah, definitely. Okay. So Mt. Gox was hacked. That means that when it comes to this specific type of currency, is it fair to say that there's more risk associated with holding Bitcoin than the US dollar?
So I don't want to say there's more risk. It's just a different type of risk.
Okay.
Someone could break into your house and take your dollars out of your safe.
Right.
It's just a different way to hack into a wallet or a hard drive or whatever it is, and take those digital assets versus a physical asset. So I'm not trying to pass judgment here, but there have been cases of poor actors, and there have been examples of theft, of crime, of, as in anything, right? There's theft and there are pyramid schemes out there, and there's a lot going on. But again, due to the very new nature, and as you're saying, the kind of, I don't understand it, it's not a tangible thing I can hold, that nature of this asset, I think it makes it a little bit more easy to just notice those examples.
Just to bring it back to the point, we've kind of gone on a little bit, but again, I needed the education. So this Mt. Gox, breach where it was, they're paying back the creditors, the folks that they owe money to because they declared bankruptcy, and they're digging out from that. When it says that there's a risk of a tidal wave, that means that there's a lot, because of that 10x value, there's going to be like a flood of Bitcoin into the marketplace, which makes it less scarce, which makes it less valuable.
It's supply and demand, right? If a lot of people want to sell a large amount of Bitcoin today because they just received those proceeds from the the settlement, so to speak, then yes, that now it might not all hit the market at the same time, but again, $9 billion worth changing hands, some of that certainly will hit the market. So supply and demand, that's the risk here.
Okay, that makes sense because we're in economics. And I feel like that's your answer to everything that you tell me. But yeah, no, thanks for bringing that full circle. So, okay, so to bring it back, that was kind of the Bitcoin education that I needed, and hopefully somebody else did as well. But the article kind of takes this to the point of comparing this to, or maybe not comparing it to, but relating it to the U.S. deficit. So this article, I know you really nerded out on this because it talked about Bitcoin, which is super nerdy. It talked about the national debt, which we've been talking about a lot, specifically with regards to what ITR has been forecasting for the 2030s depression. We've had moments in the last 2 episodes where we've talked about that, actually. So again, here we are talking about it, but with regards to Bitcoin. So the Bitcoin price is braced for the U.S. budget deficit to increase by 27% next year to $1.9 trillion, something that some think is likely to support the Bitcoin price. So what does that mean? Does that mean that our national debt is good for Bitcoin?
Yeah, so I say this all the time. I feel like it's my catchphrase, but there are winners and there are losers in any situation.
Supply and demand, there are winners and there are losers. Sometimes you appear in my dreams saying those.
That's not good.
That's the answer to everything.
But it's true. So as the national debt, right, you talked about this is a concern. We've known it's a concern for some time. I think we'll talk about it more even later this episode, right? We are always talking about that national debt.
Yeah.
Folks are taking note. And again, I don't think there's widespread adoption of, say, our expectation for a 2030s depression.
Right.
But everyone knows there's something going on here that we should be concerned about. So when smart money, when investors are looking at, well, should I be buying U.S. treasuries? Maybe I don't feel so good about that. I'll seek an alternate asset. Maybe it's the stock market. Maybe it's something like Bitcoin.
Okay. All right. So there's a quote from the article. I'm going to start by saying I don't like it, but it's in here. And I felt, given the fact that we're in an election year, that we should talk about it just because it's in here. It's a little bit of a hair-raising quote. It's a little bit of like, you can just tell it was kind of said to make you read it. So here I am reading it, doing exactly what they wanted me to do. Okay, so until the government stops spending like drunken sailors, Bitcoin as a core holding makes all the sense in the world to me. And this was the chief executive of crypto-focused financial services company Galaxy Digital in this conversation with CNBC. Adding that both former President Donald Trump and President Joe Biden have been the 2 worst presidents in terms of increasing debt in the history of our country.
Ooh.
So, yes.
Lots to unpack there.
Right. So before we unpack that, though, I want to take a moment, remind everybody that ITR Economics is an apolitical firm. So we will not be taking one side or the other in this conversation, but bringing you the numbers as we always do. And that is what we were here for. So as I approach this question, I'm going to do so as delicately as possible, and hopefully we can inform both sides of, or all sides of the argument if there needs to be one. So, okay, I am learning golf. You know this.
I do, yes.
I have been taking lessons with a pro, and it is something that my grandfather always instilled in me, that all your good business gets done on the golf course. So here I am living up to it and learning it, and I like a challenge.
Okay.
So obviously when I tuned into the debate, I found, the comical moments in arguing over whose golf game is better. Yep. And from my limited understanding, you have like this handicap, and you can really, talk about taking it digital. Now there's an app, and you can put in your score, and it kind of helps you to develop your handicap. But I also understand that you can really make your handicap whatever you want it to be to make yourself look like a better golfer or a worse golfer, depending on how and who you want to play with. So again, comical argument on the debate stage. But, this quote is specifically saying that these are the 2 worst presidents. Yeah. So, we'll pause there. And
yes.
How do you feel about hearing that?
I hate that word worst because really, you're casting judgment. Sometimes there are reasons to increase the debt. Sometimes there are not. So just to say it's bad because it's bad, really, I wish this quote, I think what he meant was these 2 presidents have increased the debt more than anyone else in history, which... Again, the debt is typically higher. So I bet the next president, whoever that might be, will increase it even more. At some point, it's a silly argument to make. But I see his point. Yes, they have increased the debt more. So technically, that is true in a way. But are we really arguing over, who's done more, who's done worse?
Right, exactly. And I think, even if we take it back to when ITR specifically started calling for the 2030s depression, and we've been sharing on our episodes and in Brian and Alan's webinars and all along, what was it, 2012 or something like that is when this conversation kind of started here. And the we share the cause or the, what's leading up to the depression. And those factors haven't really changed.
Right.
So who's contributing to them more, red or blue? Does it really matter? It's going up.
Exactly. The debt is, really the big factor. But a lot of those drivers are demographics. It's the cost of healthcare. It's the cost of Social Security.
Yeah.
Now, other things have caused increases to the debt that were also not really, I want to ascribe blame. It wasn't someone's fault that COVID happened.
Right.
Our government did respond to COVID. We had stimulus checks get mailed out. We had PPP loans. There was a huge amount of spending, which argue if it was worth it or not, or should have been more, or should have been less.
Right.
There's an argument to be made, right? That was justified in a way. And so this quote, it really takes me back, if you remember this far back, and I'm dating myself here, but when Obama was at that time the president who had increased the debt more than any president in history.
Oh, right.
Well, he was doing it in the wake of the 2008 recession. And so yes, I can see why, right? You can argue again, the magnitude, the scale, the timing, all of those things. But you can also say something happened, right? We had to react to it.
And there's, they need something to debate about, because if it was
course.
all about a golf game, I don't know if we would have our answer as to who we're voting for. That's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like to subscribe to full-length episodes, click on the link in the description below. But for now, thanks for joining. Bye, Lauren.
Bye, Lyndsay.